Hello everybody, I did an extensive presentation last night, Sunday the 12th, but it lasted 2 hours, so I thought I'd give you a 5-minute summary because the analysis I did can easily be summed up in 5 minutes to give you the heads up for where I think these markets are going at the moment. So first off, this is the Nasdaq, and with stocks like Tesla, Amazon, Facebook, they are screaming ahead. So those tech companies are thriving in this COVID economy that we have at the moment, whereas industrials and anything linked to travel and banks is suffering right now. Now, the most important thing about this week is it's the US earnings season kicks off, and we've got a lot of the main banks reporting in the next 2-3 days. So at the moment, there is no sell signal. This Nasdaq is happily sitting up here, overbought on the RSI. Any dips at the moment are getting bought, but this RSI can stay up here for as long as it likes, but we are very extended. The price earnings ratios in the stocks are, I think, unrealistic, and I think there's a wide view in the market that they are unrealistic. So we could be in for some kind of correction. But at the moment, we just need to be patient and see what this market can give us. If we now switch to the Dow, the Dow is stuck in a relatively tight range. We had a decent drop on Thursday and a quite an incredible push up, 700 pip push up on Friday off the lows. So we saw a good move into support, a reaction on Friday to push this market up. We've gapped up over the weekend into the top of that channel, or top of that flag, with the RSI at midpoint. So at the moment, like I said, there is no reason to sell this market at the moment, but as we get into the earnings season, maybe this market's going to wake up and think about the impact of COVID midterm rather than this V-shaped recovery everybody's anticipating. If it is a V-shaped recovery and I'm wrong, then any dip into that 26,000 could potentially get bought and see us come into this pink zone. The pink zone is the resistance from the 4th of March, where we got after the first impulsive wave, we got the extensive third wave down here on the 5th of March. We've already had quite a drop from the 9th of June. So this is a big problem for technical traders on the Dow, and we are not far off of that. In the meantime, we're struggling at these highs. So I'm looking out for possible sell signals, for the possibility of this market to go through a correction period, and particularly in the Dow and with an extended Nasdaq. Now let's look at the transport index. Anybody who understands the Dow theory knows that the transport index is crucial. This is the S&P transport ETF, breaking out of this symmetry, and at the moment sitting higher. Look at the volatility index, low. Anything under 40, we're currently 29.8. Anything under 40 means the potential for the market to keep going higher is still on the table. Any leap higher, as we saw here on Thursday the 11th, could suggest that some fear is coming back in the market and traders might run for the door, or certainly the investors might run for the door. Okay, dollar index. Generally speaking, dollar is divergent with the market, so this is weak at the moment. If this continues to stay weak, again, the markets could hold up and push further. If we see the volatility index and the dollar push up, then be warned, there could be at the very least a lot of profit taking on some of those extended tech stocks, and a rolling over of the industrials and banks and consumer related stocks. Oh, okay, quick look at the DAX. The DAX has gapped up right into resistance. You can see this pink zone I got up here at 13,000 on the DAX. And here on the FTSE, the fire line I've got here is 6150, which we're literally right on now. So if we cannot hold this and start closing lower underneath this 6150, then I think we're going to drift lower and come down and find these supports The major support is 5.5, 5,000. Okay, so be warned, nothing to sell at the moment, no sell signals at the moment, but be warned with the earnings season and the banks showing their results in the next 2, 3, 4 days. Okay, gold, such aggressive easing and rescue packages from coming out from banks, central banks, and sovereign states. The gold has hit the top of the channel on Wednesday, and we look higher. I was suggesting we could see a pullback to 1780, maybe even 1770. At the moment, all the little dips are getting bought, so you may not see that. So you may have to, if you want to get in this, you may have to try and pick up 1800 and get your stop under at least 1790, if not lower, to see if we can get to 1850 plus. Silver, similar story. Silver being the industrial metal right at the top of the channel as we speak. RSI is overbought, but we look as if 1970 plus is possible. If you are buying, just be very careful and don't get over leveraged because you're buying high. Ideally, wait for a pullback. Oil is in a very narrow range. You can see this big pink zone from the bar on the 6th of March. So we've closed the gap here on the 23rd of June, but we look as if we need a decent pullback to get some volume in here, and 36.70 or lower into 35 might do that. In the meantime, the fact we're sitting up, we could at some stage just power up, but at the moment it's so sedate. I think that needs a decent drop to get the volume back in, at which point I think that'll be very viable. Been talking about the grains for weeks. Beans has had a good couple of legs up. That looks as if that's coming down to $88.74. Wheat was a bit of a lagger, but that's broken up to $5.38. I now think that could come all the way back under $5. Only $5.33. So I still think there's time to catch a lower bid on that one. That's the main. Oh, natural gas. Natural gas has already had a decent leg up into 1950. It's holding the 50-day average. I think there's a reasonable, particularly if the markets roll over, we could see 1680, 1700 on the gas. Okay, quick look at the pound. We've hit this resistance at the moment. That looks lower. If we close under 125, we could roll over. Let's come and see 120 lower. Euro, very similar story, so I've not updated this. We are high, could break up if we can continue to close higher and get through that little level there. But at the moment that's stuck. So wait and see what happens, but I think potentially I think my feeling is with these markets that with the price earnings we're seeing in some of the techs which are so hot, so extended, I think the market needs a dose of realism. So I am looking to get short this market, but not just yet. Okay, that's all I've got for you. I hope that helps. Stay in touch. Keep an eye out for these videos.